Most people grow up believing one simple rule about debt: borrow, repay, be free. It sounds logical, moral even. But what if that rule was never meant to apply at the global level? What if the world's debt, not just personal debt, not corporate debt, but global debt, was never designed to be repaid at all? What if repayment was never the goal? Because when you step back, when you look at the numbers, the history and the patterns, something unsettling appears. Every year, global debt grows faster than global income. Every crisis adds more debt, never less. Every solution deepens the hole it claims to fix. And yet the system continues, smooth, polished, untouched. So the question is no longer, how did debt get so large? The real question is, why does a system that claims to require repayment keep creating debt that mathematically cannot be repaid? To answer that, we have to go back to where debt stopped being a tool and became a structure. Long before banks, before central authorities, before global markets, debt was personal. A farmer borrowed grain, a merchant borrowed silver. A promise was made and a promise was kept. Debt had limits because reality had limits. If a harvest failed, the lender suffered too. If trade collapsed, both sides paid the price. Debt was embedded in human relationships. But that began to change the moment debt was separated from responsibility. The first major shift came when debt became institutional. In ancient Mesopotamia, temples and palaces began issuing credit not as favors, but as systems. Loans were recorded on clay tablets. Interest was standardized. At first it worked, but soon something broke. Farmers couldn't repay after bad seasons. Debts compounded. Families were enslaved for obligations that grew faster than crops could. Entire societies destabilized. That's why early civilizations did something radical. They erased debt. Kings declared debt jubilees, mass cancellations, not out of kindness, but survival. They understood something we've forgotten. If debt grows beyond the productive capacity of society, collapse is inevitable. Debt had to be cleared, or civilization would fall. So for thousands of years, debt was dangerous, and rulers knew it, until someone figured out how to make debt permanent. The modern debt system didn't emerge overnight. It evolved quietly, piece by piece. The critical turning point came when money itself changed. For most of history, money was constrained by physical limits: gold, silver, land. You could only lend what you had. But in the early modern era, banks discovered something revolutionary. They didn't need to hold all the money they lent. They only needed to hold confidence. If depositors didn't withdraw everything at once, banks could lend far more than they possessed. Debt could now exceed reality. This was the birth of fractional reserve banking, the moment debt detached from physical limits. Every loan created new money. Every repayment destroyed it, which meant something crucial. If everyone repaid their debts at once, the money supply would collapse. The system requires ongoing debt to survive. Debt was no longer a temporary imbalance. It became the engine. By the 18th and 19th centuries, governments entered the system fully. Wars were expensive. Empires needed capital. Taxes weren't enough, so states borrowed. But here's the quiet shift that changed everything. Governments stopped borrowing for emergencies and started borrowing permanently. National debt became normal, and then something even stranger happened. Countries discovered that debt wasn't just a burden, it was leverage. Debt allowed governments to spend today while deferring the political costs to the future. Future taxpayers would pay. Future generations would adjust. Debt became invisible power, and the institutions that provided that debt gained something far more valuable than interest. They gained influence. The 20th century accelerated everything. 2 world wars forced governments to borrow at unprecedented levels. But after World War II, something extraordinary happened. Instead of resetting debt, the system doubled down. The Bretton Woods system tied global currencies to the US dollar and the dollar to gold. It looked stable, but beneath the surface, debt kept growing. And when the US could no longer maintain gold convertibility, the final constraint disappeared. In 1971, The gold link was severed. Money became purely symbolic. Debt became infinite. From that moment on, there was no natural limit, only policy decisions. This is where the illusion truly formed. Governments told citizens debt was manageable. Banks said growth would cover it. Economists promised stability through models. But the math told a different story. Debt grows exponentially. Economic output grows linearly. Over time, debt must outpace income. And when it does, the system has only three options: default, inflation, or more debt. Default is politically unacceptable. Inflation is hidden and gradual, so the system chooses more debt. Every time, crises reveal the truth. In 2008, the global financial system nearly collapsed under its own weight. Banks had created debt upon debt upon debt. When the structure cracked, governments stepped in. Trillions were created overnight. Not earned, not taxed, created. The debt didn't disappear, it moved. Private losses became public obligations, and the system survived, but at a cost. Debt levels exploded beyond anything seen before. And still, no one asked the obvious question: how does this ever get repaid? The answer is uncomfortable. It doesn't. The global debt system isn't designed for repayment. It's designed for continuity. As long as debt rolls forward, the system functions. As long as interest is serviced, control remains. Repayment would destroy the very mechanism that sustains power. Look at modern data. Global debt now exceeds 3 times global GDP. That means even if the entire world worked for years without spending a single dollar, repayment would still be impossible. And yet new debt is issued daily. Why? Because debt isn't about money, it's about structure. Debt creates dependency. Dependency creates obedience. Countries in debt must comply with lenders. Policies are shaped by repayment schedules. Sovereignty becomes conditional. This is not a conspiracy, it's a system. Developing nations experience this most clearly. Loans arrive as aid. Conditions arrive later. Currency reforms, spending cuts, privatization, assets move outward, debt remains, and once trapped, escape becomes nearly impossible. Debt grows faster than development, always. Even wealthy nations are not immune. Their advantage is delay, not exemption. They service debt through inflation, financialization, and asset appreciation. The burden shifts quietly. Wages lag, costs rise, savings erode. The public pays without seeing the bill. So why does the system persist? Because it benefits those who understand it. Debt generates predictable cash flows. Interest never sleeps. Control doesn't require force. And as long as debt cannot be fully repaid, power remains centralized. Every proposed fix avoids the core issue: more regulation, more oversight, more restructuring, but never cancellation. Because cancellation would expose the truth. That much of the world's wealth exists only because debt exists. Erase the debt, and the illusion collapses. The system isn't broken, it's functioning exactly as designed. A machine that converts time into obligation, future labor into present spending, freedom into leverage. And it continues, not because it's sustainable, but because it delays collapse. So what does this mean? First, debt is not a moral failure. It is a structural feature. Second, stability is temporary. The longer repayment is postponed, the greater the eventual adjustment. Third, real power lies not in money, but in who defines its creation. The global debt system was never meant to be repaid. It was meant to be managed, extended, rolled forward, normalized. Until questioning it feels unthinkable. And that leads to the final question. If the system depends on debt that cannot be repaid, what happens when confidence breaks? Because when belief fades, numbers don't matter. And when belief collapses, so does everything built on it. If this changed the way you see money, debt, or power, stay with this channel. The next story explores what happens when debt stops working and who pays the price first. Because the system doesn't collapse without warning, it whispers, until one day it doesn't.